Morning, this is Tom Alexander. It is Sunday, November 28th. It is about 10:21 Eastern time in the US in beautiful Charleston, South Carolina. Hope you all had a very happy Thanksgiving. We certainly had an eventful Friday following Thanksgiving. And I'm going to start my screen here. Let's see. A lot to discuss. Now, I encourage you to read the report that you may have reached this video through. And I'm going to sort of get into detail what is in that report. So we had this wide range down day. On Friday, we had been alerting to the fact that price and breadth were at an inflection point. You had to be alert for this sharp move. This was sort of overdue. Now, if you look at the four primary U.S. trading indices that you see on my screen, they're all over the place. So this disparate trade continues, and it's been, the disparity is extreme at the moment. Look at the Russell here, which is rapidly approaching this critical downside key reference area. I mentioned several days ago that this could be a false breakout trade, and the definition of a false breakout trade is when the market attempts to break initiatively from a balance area, it fails, and then it will tend to trade sharply through that balance area that was formed in a fraction of the time that it took to create it. Well, we're seeing that in spades. I mean, this is so far a textbook definition of a false breakout trade. Where the Russell stops is a guess. This is a very important level to the downside around 2124, 2083. You can see the Dow is close on the heels of the Russell. The ES, the next level in the ES is around 4547, 4505. And I guess the NQ is benefiting from a flight to safety, and everybody's piling in or holding up the 8 stocks that represent the bull trend from the 2020 low. I say that only half facetiously. It's substantially true. Anyway, so this is a critical level in the NQ. Now, the big question I have is this some sort of short-term panic climactic low, or is there going to be further selling? And we're going to examine that question. And I'll tell you up front, I don't know the answer. Now, if we do have further selling, and this is just some sort of short-term low, maybe we bounce for a day or two, maybe we have follow through and glowbacks and then bounce for a day or two. But if we do have any sort of substantial further selling, and that wouldn't necessarily surprise me, I think you'll see the NQ catch up, and then I think you'll see the NQ take out the low of the 10th. So we'll see. Let's go over and take a quick look at the profile perspective. Now, this is a weekly view of the ES, meaning basically quarterly. Each letter is 1 month of trade in a quarter. And if we go all the way back to when this bull trend began, which was back in March of 2020, you can see a clear migration of value as denoted by the high volume nodes migrating higher. And you'll also notice that each successive quarter's low was held in a very, very healthy fashion. Well, this quarter's low so far was right at the preceding quarter's low. So on a long-term basis, this is a really, really important level. Now, we are a long way from that level. I'm not suggesting we're going to get there. I'm just pointing out a longer term, and at this point, it's nothing more than a factoid. It's not a projection. It just is what it is. It does show the migration of value and the incredible bid that this market continues to experience to date. Now let's go down in time frame a little bit. We'll go down to a daily view. And I mentioned, I've been talking about in the previous reports how narrow range the November auction was, suggesting that it was, we're very likely going to see extension from one side to the other, through one extreme or the other. We're seeing that now. This was in the S&P futures. Now the cash looks a little bit different from this because we had a bounce in Globex that's not reflected in the futures market. And you can see we've made lower lows for the quarter now so far. And what are we coming into? Let's split this out. And this entire move off the October low was so vertical that the volume nodes are of dubious quality. There's not tons of volume on the horizontal scale. This is an area we'll keep an eye on. All right, let's just take a look at some of the others. Here's, instead of mixing and matching, let's just stick with the futures. Let me find, well, we'll just make it. All right, this is the Russell, obviously. Let's do this for fun. Let's go to the same view we started with. And here's the auction in the Russell. And you can see we're right back. And actually we're below now this high volume node of all this trade that occurred slightly below it. This would be the high volume node if I were to glob all this together. Well, let's just glob it all together just for fun. And you can see we're just right in that larger degree node. But this is where you have to be careful when you are looking at quote unquote market profile, because you really have to go inside this to see what's really going on. So if we split this out to the weekly, you can see all this conviction to the downside. And this level is really important. Now, if we go down to the daily view, here you go. Now, this is an important level, but to me, the more important level is not here. It's, I'm gonna have to combine this so I can get these lows involved. Here we go. It's down here. Well, let me drag it. Fun with signal. Here we go. Now, when we get down here, we could very easily. Also, remember this. The Russell is most sensitive to breadth, and breadth reached negative 2,000. We're going to get into that in just a minute. On a closing basis for the first time in quite a while on Friday. All right, let's look at the NQ. So the NQ is blithely holding up. It's still, pardon me, it's still in a narrow range November auction. And, Friday was not nearly as dramatic in the NQ as it was in the Dow or the Russell or even the S&P for that matter. So we'll see if this level holds next week. Let's take a look at the ES from the profile perspective. And here you go. Well, we just looked at the ES. What is the Dow? The Dow is the one we haven't looked at. Sorry. Here we go. So here's the Dow, the YM, and that's rather dramatic drop. Now, if you just glob all this together, you can see there's a high volume node here. But let's go inside of this to see if it really has any meaning. And to do that, we have to split it out. And to me, the more meaningful thing than just globbing that together is this effectively buying tail low here. So you're in an elevator shaft. There's really nothing in here on the horizontal scale, which is most important. That's where all the market profile people get it wrong. They ignore conviction. They don't give enough credit to conviction. This basically erases all of this over here. So we're in an elevator shaft here. Where it stops, well, this is as good a candidate down in here as any. Okay, so that's that. Now let's take a look at the technical picture. And there's a lot of stuff on this chart, which I don't particularly like. I like nice, clean screens, but this gives us a lot of information that I think is necessary. Breadth reached negative 2,300 on a closing basis on Friday. We have not seen a reading that negative since the end of September. And in this trend, this bull trend since the March 20 lows, what this would tell us, if unless it's different this time, is that we are close time-wise to at least a short-term low. Now, the other interesting thing about Friday's decline, at least from the perspective of the ES, and again, this would not hold true in the Russell, because the Russell just got smacked, but the decline in the S&P was only 3.3%. That would represent, if we go ripping higher from here, you know, making new all-time highs, that would be the shallowest decline in the S&P following a negative 2,000 breadth reading in over 2 years. I have a hard time thinking that's going to happen. It could happen. You have to respect negative 2,000 breadth readings in a bull trend. We are most definitively in a bull trend. Nothing has happened yet that says we're in a bear market, and it would take considerably more than just a 3.3% decline to say we're in a bear market. We could be in a topping phase in a bull market, because we have this disparate activity that you typically see at the end of bull trends, but that can take months to play out. So as from a trading perspective, if I'm a short-term trader, am I looking for a low? Yeah, I'm looking for a low, but I'm not going in hand over fist tonight in Globex and buying this willy-nilly. I want to see more trade. I am alert to the fact that, okay, we have a negative 2,000 breadth reading, and this has been near time-wise short-term lows. Now, could that have been the low? It could be. It could have been. We've had a couple of instances, particularly of late in this bull trend, where you bottomed within a day and then it's ripping straight back up. That's an issue that has to be dealt with in real time, which we will deal with in real time in the live trade room. But you always need to have some signal that triggers you into a trade, regardless of what your analysis says. You're trading price. Never forget that. This is analysis. This is, we're dealing in probabilities with this. Nothing is 100%. Okay, so if you go back and you look, now I want to show you a different view of this. That's a cleaner view. Now, this is the SPX, and each one of these green arrows marks the day on which a negative 2,000 breadth reading occurred. And let's just go through, let's go back 2 years, bear with me, but I think it'll be worth your time. And look at what happened, what followed this negative 2,000 breadth reading. Well, back in September, we immediately bungee jumped higher. We stopped into this volume node and then made a lower low. To me, this is the gift that keeps on giving. When you can get a situation like this, and you get in here and you've made a lower low, your breadth is not as negative. This is just an incredible opportunity, and it's not that unusual. This was a negative 2,000 breath reading in July. And I think this is the only time we had a negative 2,000 breath reading that coincided with the exact bottom tick in price, and then we're off to the races again. So it happens. This was a negative 2,000 breath reading in May, and then you had sort of a double bottom test here, and this came following a bounce. This was a negative 2,000 breath reading right here on this bar. We went lower, bounced, and then made a higher low. Again, this is a gift. This was a negative 2,000 breath reading here. We bounced, went lower, and then ripped. This was in November. This was a year ago. We had a negative 2,000 breath reading, had another negative 2,000 breath reading within, I don't know, this must have been a holiday. There's short-term trade here. Yeah, this is probably, I don't know what this was anyway, but on the, I'd have to go back and look on the 26th. This was, I apologize. This was in October of 2020. So we made a negative 2,000 breath reading here, and then something bounced slightly on the 27th, made another 2,000 negative breath reading on the 28th, went lower here, and then went ripping higher into one of the strongest trends of the bull trend. Now, something about this period here, this is close enough off of to this low in March 2020 that this was such an incredibly historically compressed market that you were still having some of that worked off up in here. I mean, these moves don't look like much, but these were extremely high percentage moves, both up and down in this market. But this is where it was obvious that the bid was underneath this market, because when we would reach these negative 2,000 readings, you were near that momentum low. This was a momentum low. We went lower here, lower the next day, and ripped higher. Negative 2,000 breadth reading here, bottom 2 days later, ripped higher. This was a negative 2,000 breadth reading. This was extremely bullish because price held above the previous level, and so on. Now, I want to go back and I want to show you, and this is important, because inevitably we will run into a situation that may not be as extreme as we saw in February of 2020, but this is why you have to have something that triggers you into a trade. This was a negative 2,000 breadth reading coming off the off the high in February of 2020. So at this point, if you see this negative 2,000 breadth reading, this negative 2,000 breadth reading, you're going, okay, you're licking your chops. This is the greatest buy we've had in months. Well, guess what? You go a lot lower. Now, we did go a lot lower, but notice there were not negative 2,000 closing breadth readings. Then you got the huge bungee jump back. Then you traded lower, 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 negative 2,000. And these negative 2,000 breadth readings following this one did generate extraordinarily strong counter trend rallies. You eventually bounce almost 10% here back to where this second negative 2,000, and it's negative 2,000 plus. I don't remember the exact reading. Had a negative 2,000 breadth reading here. You bounce 5.5%. Your next negative 2,000 here. The next day you bounced 7%. You bounced 8%, and then you had your lower low here, and then we were off to the races in this bull trend. Now, the point of this exercise, if I haven't lost you by now, is that yes, these are important readings when you have negative 2,000 breadth readings. They almost always indicating momentum lows to be followed by strong rallies. But you don't ever, ever, ever use any signal and close your eyes and bet the farm. If you did that here, you lost a lot of money if you didn't blow your account up. So guys, it's going to be a really, really interesting week. Let's see what happens. Oh, and I should have said this at the beginning. If you have not subscribed to the YouTube channel, please do so. If you like the video, you found value, please like it. You guys have a great week.